All right, traders, you are welcome to this class. This is a live class. In this class, I am going to walk you through your beginner stage in the financial markets. If you want to be a forex trader, you need to get your foundation right, and this is why we have this class today. So in this tutorial today, I want to walk you through the act of charting in technical analysis of trading. You are a forex trader, cryptocurrency trader, whatever you want to trade, you need to understand the act of trading, right? So there are different ways in which you can understand the market. So the act of trading simply means the way in which the market will communicate with you as a trader. You know, language is a means of communication. The market also have a way of communicating with us as a trader. Before you can do buying and selling in the financial market, you need to know what buyers are saying and what sellers are saying. And how can you know or differentiate between what the buyers are saying and what the sellers are saying? It is through the act of reading candlesticks, right? So we are going to navigate through the foundation, the beginning, the history of technical analysis of trading. I am going to show you different ways in which you as a trader can read the market, the languages we have in technical analysis. As we all know, we have a lot of languages around the world. We have English, French, Spanish, Arabic, Chinese, Taiwan, Japanese, Korean, Russian, German. We have different languages. The same thing is applicable to trading, right? Now, when we talk about technical analysis, we are interested in the pictorial formations, the pictorial or the printing of the actions of buyers and sellers. And the actions of buyers and sellers can be presented through pictorial formations, through chart concept. Now, these charts can be presented in different versions. Now, you probably have heard about candlestick patterns, right? I know most of you've seen this before. You have seen this on some of your friends' mobile phones or laptop, or you've seen this on your social media platform. People trading with this and they said they made money with this. Yes, this is real. You can make money with all these pictures you see right here. These pictures you see right here, they are not just ordinary pictures. They are printings of money from the buyer side to the seller side. Now, when we go through the foundation of trading, I am going to introduce you to the three ways in which prices can be formed on the chart, or the three languages of the market. Although we have lots more languages in the market, but I am going to introduce you to the three major popularly known ones in technical analysis of trading. Now, the first one on the list is what I call the universal language. Universal. When something is universal, what does it mean? It means it can easily be used around anywhere you go in the world, right? Universal. This is number one. And the second one is what I call the American chart or the Western chart. American chart, right? American bar chart. American bar chart, right? This is the second popularly known language or art of trading or charting. We have the universal chart. So another name for universal chart is what we call the line chart. Line chart, right? We have the line chart. Line chart, right? All right. Now we can call this second one American bar chart or Western bar chart. Western chart, Western chart, right? So when you hear Western chart, American bar chart, they all mean the same thing. And then the third on the list is what we call the Japanese chart. Japanese, right? We all know about Japan. We've watched their movies, right? Japanese chart, right? So as the name implies, the Japanese means the act of charting these techniques is originated from Japan, right? Japan. This history was traced back to a man known as Muhinisa Homan, right? He is a rice trader, a rice businessman, farmer. He was known for this as tremendous achievement with the act of using Japanese candlestick to chart, to analyze the actions of buyers and sellers in the market. Now we have the American bar chart, which is majorly used by the Westerners, and we have the universal line chart, which is used by almost all traders around the world. Now, what is universal chart all about? What is the American bar chart or the Western line or Western chart all about? And what is the Japanese chart all about? First, let's treat the line chart. Then next we move on to the American bar chart. Then next we move on to the Japanese chart. So as a trader, you need to get yourself familiarized with these three types of languages of the market. So these are three types, the three most used languages of the market. When I say languages of the market, then these are the three ways or three modes or commonly used languages in technical analysis of trading. Now let's get this off. Now we are going to talk about line chart. First, a line chart is a chart that looks like this way. Can see that? So a line chart, it's easy to understand, its modes of operation. Right here you can see this wave is going up, it's rising up, and then right here it comes down all the way. It creates a low, it creates another higher, it creates a high here, and it comes down at this level, a low. We have a low right here, rises up, and then we have a low, all the way it comes down, all the way it comes down. So this is how a line chart moves. So a line chart can be used to represent the movement of prices in the market. So whenever you see price moves up this way, you know, okay, as the price is going up, those are buyers, those are people looking for a buy. Right here we have buyers, right here we have buyers, can see that? Right here we have buyers, can see that? Buyers move price to the upside, buyers move price to the upside, and to the downside, sellers move price to the downside, to the downside, to the downside, to the downside. So this is a universal way of charting technique, which is very simple to comprehend for beginners or for novice. In fact, for someone who has never traded before in the history of their existence. So it is easy for you to know, okay, price is going up, this comes down, it moves up, it comes down. It's just like a rising ladder. It's like a ladder going up. So it's a rising ladder. When you climb this ladder, your height becomes what? You go higher, you get higher in height. Right now we can have the opposite. So we can have the opposite in this manner, whereby we have price in this form, whereby we have it to the downside, to the downside, to the downside. So it means right here buyers are trying to push price up, people are going up. When you see it up this way, it is what we call people are willing to buy, people are willing to buy. And at the downside, when price switch to the downside, people are selling, price is going lower, it's going lower, it's going lower. So this is just like a staircase you climb when you're coming, when you're navigating down from a building. So you go all the way down, right? Can see that? So these are line charts. This is very simple. You can easily know, okay, things are going up right here at this side, and the things are coming down at this side. So simple as that, right? So now let's see how this forms on our price chart. You can see right here in this, on this price chart, we can see things are going up at this medium, things are really going nice at this medium right here. You can see things are going up, 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 it comes down, up, comes down, up, comes down, looks like going up and coming down. So currently right now, as a trader, as a newbie on this asset, you can easily say, oh, this line is coming down. Unlike what we have right here, it was going up. So right there, you can easily know the direction of the market. So now you have to keep note that line charts are primarily good to identify trends. They are good mode or good technical tools or acts of identifying trends, right? Thank you. So we are going to proceed to the next one, right? So now let's move on to the next one, which is the American bar chart. So for us to identify the American bar chart, a line opens this way. Let's get this off. A line opens this way, it goes up and closes at this level, right? You can see it opens at this level, it closes at the right hand side. So if you are facing your computer, your phone, this level is your left and then this is your right, this is your right. So whenever you see a line open from the left and it goes up and close at the right, it means this is a bullish price move. O means open. This is open. O means open. C means close, right? C means close. It means price open from the left. On the American bar chart, price will always open from where? From the left. The American chart, price will open from the left and closes at the right. So it's possible price may have something like your line above, line below. This line above is what we call the I. H-I-G-H. I or wick. This is what we call the I. I or wick or upper shadow. You can call it upper shadow, upper shadow, upper shadow, right? Upper shadow, right? And the line you have bottom, which extend lower than the open, is what we call, what is the opposite of a high? Opposite of a high will be what? Low or lower wick, lower wick or lower wick or lower shadow, lower shadow, right? So that is it. Okay, now whenever you see this on your price chart, you know, okay, this chart is presented in American bar chart. Now what happens when you have a chart which opens at the top? Let's use another color. What happens when you have a chart that opens at this level and then comes all the way down and then close at the right? You have to know that prices will always close at the right and price will always open at the left, right? So whenever price open from the left and then closes at the right, whereby the close is lower than the open, that candlestick indicates people are selling. Whenever the close of a candlestick is below its open, it indicates people are selling. This is the open. Right now I will draw that again so that you guys can get that. We have this. Let's choose a different color for easy identification. We have this way, and then we have this, and we have this, right? And now we have something like this. We have it this, and we have this. You can see that. I told you, remember, the left hand side is what? Is the open. This is where the price will open, right? And the right hand side is the close. Right hand side is the close. This is the close. Get that? So it means price open from this level and then came all the way down. So it means people are selling. Whenever price go down, it indicates selling. And right here, remember, the left is what? Is the open. This is the open. The right is what? Is the close. This is the close. You can see that. This is the right side, right? This is the close is the left. You can see that whenever the open is below the close, or whenever the close is above the open, it indicates buying. It means people are buying. And whenever the open is above the close, it means people are selling. So get this concept on the what? American bar chart, right? Good. Now let's show you examples of this on your price chart. To do that, we switch at the top of our trading view. If you are using the MetaTrader, it's almost the same thing. We choose the American bar chart. You can see right now, you can see. So based on what I taught you right now, you can easily know that, okay, this is price opening from the left side of the screen, opening from the left side of the screen, right? Let's get this off. Opening from the left side of the screen, can see, and it comes down. So technically this is a bearish candlestick. Now it opens at the left hand side, closes at the top, left, closes at the top. You can see this is a bull. It opens left, closes down, bearish. Opens left, closes down, bearish. You can see that American bar chart. So this chart is majorly used by the old traders. These are like our forefathers, our grandfathers, our pioneers, our first traders. These are traders who trade in the 19s, 18s, 17s, 16, 15, 14, 13, 1930s. These are the charts they use. So whenever you see a trader trading with this, most of the time you see them, these are old traders in their 60s, 70s, 80s, 50s. You know, these are what they were being taught. So the candlestick came into existence during the end of the 1990s. During the 1988, 1998, 1999s into the millennium 2000. So this is why you see the Gen Z, the 1990s, they were the one who started the beginning. So the Gen Zs met this act of charting, right? Okay, now let's talk about the I mean this candlestick existence came to an end during the 1999s 2000. During the millennium 2000, traders, the millennials, the Gen Zs, they switched to the what? They met the candlestick, right? I can't say the Gen Zs met or they switched to, because during that time Gen Zs can't yet trade. They're still a baby, right? Let's just put it this way rather. The Gen Zs, they met the candlestick, but during the 80s, 70s, 60s, 50s, all the way down, you know, the Western bar chart was popular, was the most commonly used art of trading, right? Now these are American charts. Now let's check the Japanese candlestick. So this is what you and I will mostly trade with. I can trade with Universal or the American bar chart, right? But most of the time you see traders trading with it, because there's a reason why people like to trade with this, because it is easier to read. It's simple to comprehend, right? People can easily read this, and I will show you why people prefer to read it, because it has a lot of more data to offer, right? Now when we talk about candlestick, this is what we talk about candlestick. Now I'm going to draw examples of candlestick for you so that you can see this on your price chart, right? I drew line chart and I drew American bar chart. Now let's construct the Japanese chart. Now this is the Japanese chart. The Japanese chart will usually have a body, but it is not necessary it has to have a body. But how can we dissociate people buying and people selling on the Japanese candlestick? It's the same thing like American bar chart, but the difference is right there is the Japanese candlestick has a body. In fact, I see the American bar chart like an incomplete version of the candlestick pattern. Yes, I can prove this to you. So this is the open of the what? Of the bullish candlestick. This is the open. It opens from the what? From the left. It opens from the left, and it closes at the right. And I told you the Western bar chart comes from this side, goes all the way up, and closes right here. Now you can see they are similar, but the difference is right here is the candlestick, or the Japanese candlestick rather, have a body covering the Western bar chart. Now you can see the rectangles right here. The rectangles right here covers everything that the American bar chart print. You can see that it covers everything. It covers all the outside. You can see that it covers everything, right? So in my simplest definition, I see the American bar chart as an incomplete version of the Japanese candlestick. That is all, right? So what we are going to do right now is just to remove the inside black bars of, you can see that that is gone. Now we have a candlestick, no Japanese candlestick, right? Now it can have what we call the highs. We have the highs as well, and we have the lows. Remember as well, we can have the highs and lows on the American bar chart. So let's do that again. Let's practicalize that. We have it opening from the left. It can have a low, and then when it goes up, it has a high. Then it comes down, it closes at the left. You can see that. You can see that. So it's almost the same thing. You know, the only difference right here is okay, the Japanese candlestick has a body. It covers everything, right? It engulfs, it covers, and then we have the eye, and then we have the eye right here. You can see that. So we can easily eliminate the American bar chart. You can see that. So that is just it. So which means if you can read the American bar chart, reading the Japanese candlestick will not be an issue to you. Likewise, if you can read the Japanese candlestick, if you exercise patience, getting the act of reading the American bar chart shouldn't take you within few days or few hours, right? So that is it. Now what we have right here is a price open from the bottom and it closes at the top. On the case of the American bar chart, we use price open from the left and the closes at the right. But on the Japanese candlestick, rather, we say price open at the bottom, and then closes at the top. That is it. So the peak is the high. This is the high. So the high is a level whereby price was unable to sustain, and we have the low. So this is the low. You can see that. The same thing is applicable on the bearish candlestick. So remember, on the bearish candlestick, for a candlestick to be a bearish candlestick, the open will be at the top and the close will be at the bottom. So if someone should ask you what is the difference or what are the differences between a bullish and a bearish candlestick, that means between a selling candlestick, but we are not going to say selling candlestick, we are going to say bullish or bearish candlestick. So this is what we call a bearish candlestick. A bearish candlestick, you can see that bearish means to sell. Whenever you see bearish, it means to sell. And you've heard about these animals called bears. Your animals called bears, whenever it wants to attack its prey, it swept or it clamped down on its prey. That is a bear. A bear is an animal, right? So it is carnivorous animal. Whenever it wants to attack its prey, it clamps down or swipe down on its prey. So that is why that is where the name was being originated, bearish. It means to suppress, to push down, right? To compress something, to push it down. So that is the reason why we call it the bearish, because the way the animal attacked its prey, right? So that is it. Now, when we talk about bullish, we've heard about bullish, bull. Whenever the bull wants to attack its prey, it swiped up with its tongue. It swiped up. So this is why we call bullish candlestick. It swiped up, it throw its prey into the air. So whenever things are going up in the market, moving up, then we call it bullish. No, the name was being originated from the characteristics of the bull, right? So simple as that. Bullish, it means prices are going up, and when we say bearish, it means price is going down. So that is it. Now we are going to come back to our explanation of the opening and closing of our candlestick right here. So let's just check the open and the close of this candlestick. Right now, this candlestick, right, as you can see, I told you whenever we are using the American bar chart, it opens from the left, right? It opens from the left. You can see that it will usually open from the left. When it opens from the left, it comes all the way down and it closes at the right. You can see this is our left side of this price, and this is the right side of this candlestick right here. You can see now, you can see the American bar chart is inside. The American bar chart can have a high or a low. Now you can see the differences right here is just that, okay, the candlestick is just covering the Western or the American bar chart. You can see that it covers it. The candlestick can have a high as well, and then it can have a low. So if we should eliminate this, right now we have a candlestick. That is all. That is all. You can see that. So to me, the American bar chart is an incomplete version of the Japanese candlestick. Simple as that. So this candlestick is very easy for traders to easily understand. So that is why we majorly use this concept to teach beginners in the market, right? Okay. Now we have the I. This is the I. That is the highest peak reached by the price, but which price was unable to sustain. And we have the low. This is the trough. This is the lowest point reached by price, which price was unable to sustain, right? When I say sustain, it means price was unable to close at that level. So we have a low. Now, the next question now is, what is the differences between the open and the close? What is the differences between the close and the open of this candlestick? The differences is what we call the body. So what you see right here, inside right here is body. These are the body. You can see that. So I am going to use their corresponding color to draw them. Right here is what we call the body. This is body. Body. This is the body of the candlestick, right? This is the body. This is the body. And right here, this is the body of the bullish candlestick. This is the body, right? Body, right? So the differences between the close and the open is the body. Likewise, is the difference between the open and the close on the bearish candlestick is the same as body. But this doesn't mean every time we will always have a body. There are some situations whereby we might not have a body on a Japanese candlestick, whereby we can have something like this. You have something like this. You have something like this. So whenever you see this, don't be scared. Don't be scared. I'm gonna explain what this means on our price chart. Remember, I told you Japanese candlestick, they can look like this. They look like this. This was what I told you. But there are some situations whereby they won't have a body. Now let's dive into that. Now, when we have a candlestick that opens such this way like this, we have it like this. Now we have this. This looks like a holy cross, holy Mary cross, you know. And we have this. This looks like a plus. Now we have this like an inverted cross. Right now, what happens right here was price open at this level, and I'm going to tell you something very interesting right here. This is the open. Price went down. Price was unable to sustain the low. This is the low or lower wick or lower shadow, and the price reversed all the way and closes at the same level. Now remember what I told you based on the body of candlestick. I said the differences between the body, the open and the close is what gave us the body. Now what is the differences between the open and the close right here? There's no difference. Open and close at the same level. Open and close at the same level. Or like a candlestick like this, whereby we have open at the bottom, close at the top. You can see there is a differences between the open and close. The close is at the top, the open is at the bottom. But right here, both close and open are at the same level. They are the same level. Now this is why we have this candlestick that looks like a doji. In fact, I'm not going to say doji, but what we call this candlestick is a dragonfly. You can see it looks like a bat. Like a bat that wants to fly. It looks like a cross. You can call it whatever any name you want to call it. It doesn't really matter. But what really matters is you know the technical implication of this when it comes into the market, or you see it on the trading chart. Now, what this price movement means right here is when the prices open at this level at the right hand, at the left hand side, sellers push the price all the way down. But suddenly, buyers got into the market and they resisted the actions of the sellers and they pushed the price all the way up back to where the market has opened. Now we have what we call the dragonfly. So that is what we call the dragonfly. So the dragonfly means there are a lot of buyers in this market to the extent that they rejected the actions of the sellers. Sellers are at the red side, they push the price down, and buyers are the blues or sky blue side and they push the price back to the upside. So that is what we call the dragonfly, right? So we can remove this vector right here. Remove this vector. This is what we call the doji, or a dragon doji. It's what we call the dragon doji. So whenever you see the word dragon doji, dragon doji, dragon doji, this is what we mean as dragon doji. is a dragon doji, right? So it's a popular candlestick in the market, right? Which whenever you see it, you have to pay attention to what the buyers are doing. You have to pay attention to what is going on between the buyers. It means the buyers and the sellers are in a state of war, and the buyers tend to be dominating to the end of the trading activity, right? Now let's view what happened right here. Right now, before we move on to this candlestick right here, number 2, I'll tag this as number 3 and I'll tag this as number 1. You can see right here we have a low, but there isn't any high right here. But there isn't any rigid rule that says you might not have a high. You may have a small high, but the high should be kind of very small, not to this extent. If it's up to this extent, it's turning to something else. So the high should not be too high. Right now, when you have something like this, you have equal highs and lows. Remember, this is the high or upper shadow or upper wick. This level right here, this is the high, and then this level at the bottom is what we call the low, right? So this is the open, and then this is the close, right? Now remember, when prices came all the way from the open, the sellers or maybe the buyers, they took part in the market. Now the sellers, they pushed the price all the way down, and the buyer said no, they pushed the price upward. That was what resulted into a lower shadow, and then the buyers went up again and they pushed the price up from the opening and pushed it all the way higher. So people thought price was going up. Suddenly, before the market came to an end, the sellers got in again and said no, we are not giving up, and they pushed the price all the way down, and they both ended at the same level. In fact, I see this as an equilibrium bar. So sometimes you might be hearing equilibrium bar, or you hear ranging market. So in advanced technical analysis of our market trend, you're going to hear about sideways market, ranging market. Now I want you to know right now from the foundation of trading that whenever you see this long-legged doji or a doji, you can call this a doji. It depends on the sizes. If it's a normal regular doji, you call it a doji. But if you're kind of a very long doji, like something like this, you call it a long-legged doji, right? So if it is normal, that normal length size, you call it a doji. So this is a doji, this is a doji, so just an ordinary doji. Now this doji right here, it means none of the buyers or the sellers are able to defeat or to win the battle. It means they were at a state of equilibrium. They both exercise the same equal right, right? So they opened at the same level, they closed at the same level, right? They gave the same high, the same low. It means the market is in a tug of war between the buyers and the sellers, and no one was able to defeat or be the winner or the champion in the competition or the battle, right? So if you should break this candlestick down to the lower, let's say for instance you see this candlestick on the 4-hour chart, or maybe you see it on the day chart, and you now navigate all the way to the 15-minute chart, 5-minute chart, or 1-hour chart, you are going to see this doji candlestick will be a rangy chart or rangy trend on the 5-minute or 15-minute chart, right? Do not worry, this may sound complicated for now. Do not worry, in the later section of our trading tutorial you will get to know what I mean as a doji means a sideways market on the lower time frame, right? Now this is a doji. Now let's talk about this third candlestick right here, right? We have our open at this side. It's our open, and the price went all the way up. Price looks like, oh, I'm going up. After it's open, buyers started pushing price all the way up. Push the price up. They swung the price up. They swung it up, and the seller said no. The bear said no, attack, push it down, and they pushed the price all the way back to where the market opened. And they were unable to push it down. Even though they tried to push it down, they were able to put it very small. So in a situation whereby the wick below is kind of low, it has turned to something else. It's no more a this candlestick right here. I'm going to tell you the name of the candlestick, but exercise patience. So in case you have something like this, no, this candlestick is like a doji candlestick, right? But whenever you have like a kind of a very small wick at the bottom, is what we call, or whenever you have none or when you have little, it's what we call the gravestone. So we call it gravestone, and I'm going to tell you why it looks like a gravestone. Gravestone, as the name implies, I know most of us have gone to the burial ground, to the graveyard, to bury our loved ones, our late grandfather, great grandfather, When you get to the grave, or the graveyard, you are going to see the tomb right there, the tomb on the graveyard. You're going to see this kind of pictures whereby people write in memory of our loving father, loving mother who died on the so. You see the structure of that tomb, right? Burial ground. You see, it usually look like this, like this. I'm not a good artist, but let's see if I can try. It looks like this. It looks like this, and it looks like this. It looks like this, right? Am I right? It looks like this, and then you write in loving memory of our father who died in so 1960 blah blah blah. May he rest in perfect peace, and this is where he's being buried, right? So this stuff right here, you can see that it looks like a gravestone. So the upper wig is where you put the name of the late person, and the bottom right here, this level, is the corpse, right? So that is it. So this was how the name was being originated, gravestone, because it has a similar look like a grave or yard or gravestone or whatever, tomb, whatever, that is how it looks like. So whenever you see that, that is a gravestone, right? So we call it gravestone. And I'm going to tell you what this gravestone means. You know what gravestone means? Gravestone doesn't mean something nice. It doesn't mean something pleasant. As the name implies, when we lose our loving ones, our loving family members, friends, we are sad, we are not happy, right? We are not happy. Even if the person is a bad person, people are still going to feel remorseful and they not happy, right? Now, gravestone right here, it means people are selling. So when prices open at the bottom, people try to buy all the way up, but suddenly, people came in. They came in right here, and they did what? And they shut it all. They sell all the way down, and they're closing at the same level. So this is what we call as gravestone. You can see that gravestone. So it means people are selling, and the sellers dominated the market. So it means the sellers has higher tendency to continue the next candlestick to be downtrend. Now this is candlestick. Now I've shown you how candlestick opens through their open and high, open, close, high, lows, and body, right? Now this is the foundation. Now let's go on our price chart and see examples of candlestick right here. Now I'm going to ask you some series of questions. I need to know if you really understand this class right here. So I'm going to ask you some questions right here in this class because I really want to know you are going along with me. So what do we call this candlestick right here? This red candlestick right here, we call it what? We call it a bearish candlestick because it shows us that people are what? People are actually selling, right? So it shows us people are selling all the way down, right? Good. You can see the red is people are selling all the way down, selling. Now you can see the doji I told you. This is what? A dragonfly. I'm gonna zoom this to be bold so that you guys can see that very well. You can see now we have a gravestone right here. People are trying to buy. You can see that gravestone. We have a doji. This is a doji, and this is still a doji. Now this candlestick don't just form, they work in line with time frame. Right now, currently right now, I am on the chart of the British pound sterling paired against the USA. These candlesticks are the same thing on any market. It could be Forex, crypto, stocks, commodity indices, any market you trade, right? This could be any market you trade. This could be any market you trade, right? Now, let's come right here back. Now, based on what we have right here, this is the British pound sterling paired against the USD. This can come up in the crypto market. We have BTC. Let's check the crypto market. Wow, this is a great example right here. I love this example right here. You can see right here, doji right here. You can see that people are buying from this support right here. People are really buying. Do not worry what support is all about. You still get to know that. You can see our price plunge into this level. We have a crash. We had a crash to this level, and people right now are buying. Right? You can see that. That is a doji. So this candlestick, they can form in different ways on the price chart. Right? Form in different ways on the price chart. You are a forex trader, you are a crypto trader. Let me show you an example of commodity market. This is a coffee. I know most of you like coffee. Okay, if you do not like coffee, you like sugar. This is sugar. If you do not like sugar, you like cocoa, you like bombita, right? You like chocolate. This is chart of cocoa, chocolate, right? We have this gravestone. This is a gravestone right here. You can see that. These are dojis, dojis, dojis. These are bearish candlestick, bullish candlestick. You can see that. So let's go through Forex market. These are Forex. And let's go through the index market. You want to trade S&P 500. In fact, I love what I'm seeing right here on S&P 500. We traded this currency today. I mean, this asset today, we made a lot of profit right here. So you can see that this is doji, and we acted based on what we saw right here, based on the concept of all this doji in combination with other factors. You can see that. So candlesticks are important aspect of trading. You as a trader cannot do without this concept. These are the languages in which the market will communicate with you, and that doesn't mean that is the only thing you need. You still need other factors to be combined to make it a strong technical factor before you go in for a buy or for a sell. So this is the foundation we started right now with technical analysis. As we progress, you keep on learning more candlestick. This is not the only candlestick we have. We have single candlestick pattern, we have double, we have triple, we have quadruple, we have 5, 6, right? But as a beginner, I'll advise you to stick to the simplest, easy one and the most reliable ones. So as we progress in this course, you're going to see more of these candlestick patterns. So for now, we've gone through the candlestick, how it opens through open, close, high, low, body, right? We went through the universal chart. You can see that. I switch it to the line chart. You can see it right there. The line chart has some limitations. It won't show you the open or the close, but it will show you the trend. So the line chart is nice. It's perfectly used, mostly used to check out trends. You can see that. Now on this price chart, we have what we call higher low. Do not worry, you are still going to understand what higher low is all about. Equal lows, EQL, EQL, break of lows, sweep down, up again. You can see that. So these are advanced technical concepts. Sweep up, liquidity sweep. What is what SMCI city traders call BP grammars. It's just fading the breakout, fake breakout. So do not worry. As we progress in this course, you are going to learn more about technical analysis. So for now, I just want you to know that we are going to focus primarily on the candlestick, and sometimes we're going to make references to line chart. So we can do away with the bar chart, American bar chart, but American bar chart also has its own usefulness. As we progress in this course, you're going to know the reasons why some traders prefer the Western bar chart or the American bar chart. The American bar chart helps you to neglect emotions in trading. Do not worry. This may sound complicated to you right now. Do not worry. As we progress, you will know why some traders prefer the American bar chart to the candlestick patterns, and why you need to combine line chart with your art of charting. Maybe you want to use candlestick, Western bar chart. You still have to at least know how to utilize the line chart, because sometimes the market can be so tricky and so in a state of complexity whereby you find it difficult to know the actual move. So when you switch to the line chart, it gives you a clearer and more easy way to understand what is really going on in the market. You can see that, so you easily know the trend, what is going up, right? So this is it. Now we are going to move on to the next concept right here, which is Japanese candlestick. We're going to focus on Japanese candlestick. So I told you in the few minutes ago, I said we have a candlestick like this. Okay, let's get this off right here. We have something like this, and we have something like this right now here, and we may have what we have, high, low, right? And we may have high and low, right? So right here and right here, they are high or upper wick. Right here and right here are low, right, or lower wick, where this and this are what we call the body, right? This is a bullish candlestick. We have open at the bottom and we have the close at the top, right? The differences right there is we have the open of bearish candlestick at the top and we have the close at the bottom. So this is where we put an end to our class today. I hope you guys found this useful, helpful. If you found it helpful, like, share, put a comment down, suggest any topic you want us to treat in the next class, right? Also, time for questions and answer. Do we have questions in this class? Ask your questions. before we put an end to this class, right? You also have the recorded version of this class as a VIP student, right? So Ms. Falake, do we have questions? Those in the class, do we have questions?
No, everything is self-explanatory.
All
Thank
right,
you.
all right, thank you. So after this class, I'll send a copy of this class to you. So we meet, that will be on
Friday.
Friday, right? And then please try to go to the last videos I sent to you. Watch those
Okay.
videos, right? So this will help us to move faster in our
Okay.
trading course, right? So see you on Friday,
Thank
right?
you.
You're welcome.